Welcome to our podcast. In this particular session, I have a special guest with me with whom we will be unpacking some major important economic events that will impact you. Why you should be watching? Because every time you are looking at gold prices, every time you're looking at a stock market, one natural question comes to your mind, and that is how high this particular market is going to go. When will we see retracement in gold prices? And if that retracement is going to be healthy enough, and how far that retracement is going to be. More importantly, what I would be unpacking with my special guest is if the rally in gold will continue from that particular perspective. Now, with all said, let me please welcome Aaron Hill, who is the Chief Analyst for FP Markets. So, bit of introduction from your side, Aaron, how you are immersed in this space, and then we'll take it from there.
Thank you very much. I'm the Chief Market Analyst at FT Markets. I've been involved in the financial markets for around 15 years now, and as I've said numerous times now, my core focus at the company is blending macro and tech to formulate trading scenarios and across major asset classes.
Thank you. Okay, so cross assets. Let's begin with this one, particular one, in terms of cross assets. Tell me what is happening with the dollar. Everyone is looking at the dollar and then they're thinking that this particular asset class, this particular currency is only going to go down because of the Federal Reserve's liquidity. But what we are really looking at currently is a situation where the US government is shut down. Could you please help us to understand if dollar will continue to move lower? And when will we see the US government opening up, given so much tremendous pressure that we are seeing?
Okay, so regarding the shutdown, the US government shutdown, no one really knows, right, when that's going to... I've heard a few predictions for next week. It might reopen, yeah. But as we all know, Trump holds the record for the longest ever government shutdown.
Were you trading at that time?
No, I wasn't. No, 35. I think he holds the record 35 days. But I found something very, very interesting regarding this, the market reaction to this. If you look back in history for the government shutdowns, on the a median average, I think it's around 0.3% gain in US S&P 500
During the shutdown or
during the shutdown.
Oh, wow.
Yeah.
Okay.
You know, obviously I can't remember where I saw that, but it was I think it was Bloomberg.
Yeah.
And I saw that. Yeah. So in terms of when that will be, when the government shut down, it's anybody's guess at the moment. I think the longer it goes on, of course, is we have a lot more. It will cause a lot more issues in terms of economic data, especially to traders, right? Especially the news event traders.
Aaron, tell me, when was the last shutdown, right?
I think it was Donald Trump.
Donald Trump, right?
2018.
So 2018, when that happened, what did you do? What were you looking at? What were your feelings like? What are the similarities between that time and now from your experience?
I think similarity, I think this is different because now it's all about AI. Put the stops and fueling the stock market and things like that. I feel this is very different. I don't believe there's Democrats and Republicans. I don't think they're going to budge just yet. I believe it's going to be an extended. I mean, you'll know Donald Trump, right? He's going to hold out till the end, I believe. I could be wrong. I hope so. But who knows with Trump? It's similar in terms of the economic data, right? We're as primarily as a news event trader. That's very important today. We've only got access to the private data, right? So without the government data, it causes a lot more issues, especially for the Fed, right? Especially for in terms of their decisions and things like that. That's the similarities, I believe. The difference is we have an AI-fueled rally.
Okay, should we be worried in terms of the current government shutdown? Worried means like the current shutdown could actually bring some retracement in the market, could actually derail confidence among international investors. Should be worried about that one. Yes, small retracement would be, I'm sure you're going to buy it. You're going to be happy with that one. But I'm talking about if there is actual loss of confidence
Well, there's already a loss of confidence, right? I believe there's a loss of confidence, and this only adds to it. I think the longer this goes on, the more loss of confidence will happen. And this is another headwind for the US dollar, right? So I am primarily a dollar seller right now, coupled with the Fed rate expectations, coupled with Trump's chaotic approach. I just don't see much going for the US dollar right now.
So you think the US dollar will continue to move to the
I
downside?
do believe so.
Okay. And then here is a scenario, which you and we have discussed previously. With the government shutdown, with the FOMC meeting coming, and on a separate podcast, we discussed 3 different scenarios. If you want that, we will put the link over here to learn about the 3 different scenarios going into the FOMC. But this third one is quite an interesting one. Let's say that the Federal Reserve doesn't cut the rate, and because they use the excuse, we don't have the data. You're saying dollar will move lower, but how dollar would react under that circumstances, they do not cut the rate.
That's a completely different scenario, right? So right now the markets are pricing in around 50 basis points of easing, so 2 rate cuts.
Yeah.
The Fed, through the latest SEPs, the SEP, they project 2 rate cuts this year. So if they don't cut rates as expected, this will see money market expectations change dramatically and really be a catalyst, I believe, for a strong dollar move to the upside, strong move to the upside of yields. And as we discussed, this could be the catalyst that really pushes gold lower. But I don't believe that will be a reversal. I believe it's more of a correction and a dip-line correction of that.
Okay. So that brings us to an interesting point, and that is about gold prices, right? So it's parabolic. It's not. It is straight to the top. First of all, do you have a position in gold?
No, I don't.
No. You can't buy it.
No.
You have a conflict of interest. Okay. So would you have considered that I wish I would have? So did you see this one coming? Gold prices moving to this particular level?
In all honesty, no. No, not at all. Not parabolic moves such as this. But if you look at the drivers behind gold right now, Fed rate up expectations, recessionary fears in the US, given the job growth, US job growth, I can't see what stops this other than that the Fed coming out and surprising markets. But as being broken out, right, the Fed generally doesn't surprise markets. So I still think they are going to cut.
Yeah.
I do believe they will cut. I think the focus will be more on what happens in the future, probably 2026, maybe even the December's meeting, right? October, I think, is almost a done deal, I believe, especially with the US ADP, right? That come out minus 32,000.
Yeah, man.
As though it's private data. That's all we've got to work with right now.
So, yeah, and then this is the most difficult part, right? Because as a trader,
it's uncertain, right?
Uncertain. We don't know. We can't rely on any other numbers. Generally, you would say it last week on the US non-farm payroll, you would just say, yeah, okay, you know what? The data is bad. Now the Federal Reserve is going to cut the rates. But that is
not, right?
Yeah. Now that is not the play. The play has changed completely. Now what we're looking at is that, okay, we don't know what is going to happen if the Fed is going to cut the rate or whether the Fed is not going to cut the rate. I wanted to understand the reaction from Donald Trump. You think what that reaction could be if, let's talk about both scenarios. If they cut the rate and if they do not cut the rate.
Well, either scenario, I don't think he's going to be very happy. You saw the last rate cut, right? He still wasn't very happy with poor old pal.
You know the thing that I love the most? After every tweet, he says, thank you for your attention.
Thank you for your time and attention to the matter, is it? So I think he'll be negative either way from Trump. He wants, correct me if I'm wrong, he wants 150 basis points of cuts. Is that correct?
Yeah.
200 basis points?
Yeah.
Which is a bit ridiculous in my opinion. So I don't think he's going to be happy with the 25 basis point cuts. Look, if they cut, I don't think it will be as severe, his approach to Fed Chair Powell. But if he doesn't cut, all bets are off the table regarding how Trump will respond to that. I believe it will be very direct, very instant, and quite powerful. towards 4 pounds.
Okay, let's discuss few scenarios that we have not discussed so far. Okay. Scenario number one, Fed cuts the rate and the assumptions are the US government is open. They have the data. It opens, right? And as a traders, you should pay attention to these ones. The scenario analysis is the most important thing in terms of your support and resistance levels. They cut the rate. That's the scenario number one. But the commentary is hawkish. How market will react.
I believe it will be a hawkish reaction to the markets. Dollar up, yields up, gold. I hate to say gold down, but gold may take a pop lower, but it won't be. It'll be a correct dip buying correction, I believe, for gold. But yes, I do believe there will be a hawkish reaction in the markets. Is that with data in hand?
Data in hand, yeah.
Yeah, that will be a hawkish reaction, but I don't think it will be a very, depending on what they say, I don't think it'll be a short-lived reaction.
Okay, now scenario number two. They do not cut the rate. For whatever reason, they do not cut the rate, but the commentary is very dovish.
Ooh, it's a very good one. Commentary is dovish. I believe that could be a dovish reaction in the markets. Yeah, because I think that, look, what traders are looking for right now, especially the ones I've spoken to, they're looking for what's ahead.
What's that?
We've got 2 cuts priced in this year, 2 cuts from a Fed price expected, and 2 cuts priced in from the markets. We're in alignment for this year. I think it's what's ahead for 2026. That's the difference. That's the divergence. For our markets are pricing in more for future years than the Fed. So that's the issue. That's the divergence here. Yeah, it'll be looking more to what the future is. But I think uncertainty will be the word of the day.
Okay.
Yeah, so it's going to be, I believe in that sense, certain scenario will be a dovish. I think it's all about the language.
Okay, now let's recap. We've discussed 2 scenarios. Number 1 scenario is the Fed cuts the rate and the commentary is hawkish. Number 2, the Fed doesn't cut the rate, but the commentary is very dovish. Why I think this one is quite important is if they cut the rate, everyone knows that the cut is going to be 25 basis. Be not much reaction.
Yeah.
As you correctly mentioned, if the commentary is hawkish, market is going to say, what is going on?
Exactly.
They're going to say that this is not right. This is not right. If they do not cut the rate, but the commentary is dovish, market is going to say, well, they were only going to cut the rate by 25 basis points. The next rate is going to be even more deeper because the government was shut down. They didn't have enough data.
It can be a 50 basis point cut, right?
There we go. Now we come to the third scenario, which is just mentioned. They cut the rate and the commentary is dovish. What the market reaction would be?
Cut the rate. Yeah, I believe the dollar will be. Depends on the money market expectations and the rate expectations, how far that's priced out. If we get a strong move in that market, I believe that dollar lower, probably year-to-date lows for the dollar index.
Wow.
Yields lower.
Gold above 4,000.
Gold, yeah, for sure. Yeah, gold above. I think you're looking at a solid move above. If we're not there already before that, I believe we will be before that. You're already there, really, on the doorstep.
Yeah.
So yes, I believe it will be very comfortable above 4,000 on the back of that.
Okay. That's all for today. Thank you so much for watching and stay tuned as I will be bringing Aaron more and more in our podcast to discuss about markets. But this particular event, which is coming up, is a most important one. And if you wanted to have more information, do follow Aaron on his Twitter and do follow us at Naeem Aslam 23. We'll be back with more. Thank you.
Thank you.